I'm joined today by Colin McKenzie, whose company, Colin McKenzie Limited, specialises in property search in the southeast of England. Colin, can I ask you first to tell us a little bit about your business? How long have you been around, and what exactly does your business do?
Well, I'm personally well past my sell-by date. I became an agent in the late 60s and stayed with the same firm, a London firm, through till the late 90s, when I was encouraged to join the buying team on another London firm and became a buying agent. It was about 4 years later that Liz Mercer and I decided that we would be better independent than tied to a firm best known for selling houses. So we set up our firm in 2003, essentially because of my experience and geographic knowledge covering country houses across the southeast of England. So we look from East Kent right across to the kind of Petersfield area, normal client price range, 800 and 900,000 pounds up to whatever, 4 or 5 million.
Yeah, and you describe yourself as a buying agent. Do you do any searches for lettings, or is it exclusively buying?
No, we find that what we bring to the party is our relationship with agents. So the agents' relationships we've established are uniquely selling agents rather than letting agents. The letting market is so different. It's so instant. It's something we just can't handle at the same time as finding properties to purchase.
Yeah. So we're talking today about money laundering, or more specifically, anti-money laundering. When and how did that begin to affect your business?
Well, it preceded anti-money laundering came the coming of the Estate Agents Act, the question as to whether search or buying agents were really estate agents as far as the meaning of the act was concerned. And that was clarified as being a definite yes. Anybody who acted for somebody in the transaction of property was an estate agent for the purposes of the act. So right from the early days of anti-money laundering legislation, we knew we had to comply. Initially, 10 years ago, but really it was I can't remember which directive of 2017 that made everything very much clearer.
Yes, I think that was the fourth AML directive. We're now at the fifth, and I'm sure there are more in the pipeline.
Absolutely.
So, what did that mean for you in practice? What were the practical things you had to put in place? And I assume starting with registering with the UK's authority, Revenue and Customs.
That's right. Before that, I can't remember who it was before that, Hmrc took over the registration process about 5 or 6 years in. Before that, it was made quite clear that the government was funding AML on the basis of registration fees and fines. So there were some fairly dramatic fines being raised before Hmrc took over. Hmrc has now lifted the registration fees, so there's not so much of a kind of bias towards fining for the slightest miscreants of regulation. But yeah, I mean, in terms of practical things, we registered with Hmrc for anti-money laundering. It was made quite clear from the training courses that we were going on that we should also register with the National Crime Agency, so that if there was any suspicious activity, we had the ability to report that. The regulations required us to set up and set out our internal policies and procedures so that we comply with money laundering, as well as having a risk assessment statement. The risk assessment statement we found very difficult because there was very limited guidance available as to what this should cover. And of course, the risk assessment has to be specific to our company. It's not just a general statement. It's geared much more towards the kind of clients we're looking after, kind of price ranges we're looking after, etc. So anyway, we put together what we thought was a policies policy and risk assessment statements. We appointed our nominated officer. At the moment, there is only one director stroke employee of the company, and I am not she. So as a consultant, I am qualified as a responsible person under the Act. We set up, we knew that we had to undertake training. So with a combination of external and internal courses, at the time we started, we had a second employee. So we were having internal courses, including questionnaires, etc., and maintaining a training log. There have been, as far as we can tell, we're not involved in lettings, so there have been comparatively few changes to legislation. Mm-hmm. So our training is really refreshing training rather than new things to learn. And the final thing really is the discipline of knowing our clients, both in identifying our clients, who our clients are, and the source of their funding. Yes, but that was what we had to put together really to comply.
Yeah, so in terms of risk assessment, I guess, for example, if you're buying in central London and most of your clients are coming from, let's say, Russia, or you deal with a lot of political figures, then your risk assessment would be very much higher than dealing with people you've been recommended to, you've come into your office, you've met, etc. Is that the kind of risk assessment you're meant to carry out?
Absolutely. It's trying to identify where exposure to money laundering where we could get involved in exposure to money laundering in the transaction of properties from our clients. As you say, the kind of client we're acting for is important in that process.
Yeah. So you had to put quite a number of things in place. Reflecting on it now, I mean, where are continuing to be the biggest hassles you face?
I think the most important thing, and this is becoming quite evident from the profession generally, it's very easy to just make this a process. New client, can we see your passport, please? Can we see a copy of a utility statement? Tick the box, we've covered that. The hassle is in continually reminding ourselves, as nice as it is to get a new client, that we've really got to do more than scratch the surface to identify who we're actually going to be acting for. The kind of business we're in buying country houses very rarely attracts overseas buyers or people who are not UK domiciled. So we don't usually have that kind of difficulty, but we are dealing with prime properties which require a greater degree of due diligence. So that remains to be, we have to continue to kick ourselves to make sure that we've done more than just jump through the hoops. Training is a hassle because, as I say, there have been fewer changes to regulation. So one would have thought training became easier, but again, it's easy to fall into the trap of saying we know it all when we don't. Yeah. And so our training is much more regularly, reminding ourselves of what we've got to look after. And then really the other hassle is in terms of due diligence. Now, it's easy enough with our own clients to explain that we do need to know who they are, seeing their passports when we meet them, so that we can ourselves verify that they are who they say they are, looking at utility bills, etc. It is more difficult in saying to somebody who says that they've got £3 million in cash, oh, sorry, can I see your bank statement, so that I know you've got £3 million of cash, and that becomes a hassle at times. And the biggest hassle now that the fourth directive came out is to identify or have proof of identity of vendors, and asking somebody who you have no business relationship with whatsoever if they can produce identity confirmation. It can be a hassle, and indeed this is something we explored when we met the Hmrc inspectors.
Yes, this would mean, for example, if you were buying a house, let's say from Savills, you are asking Savills to provide you with the evidence of identity of their client, the seller. Although your client's the buyer, you still have to go that extra level to the seller.
Absolutely. When we get to the point of agreeing a sale, which is the point of the business relationship under the Act starts, we are of course asked if we can produce proof of identity for our clients to satisfy the Act. Some agents, those one particular owned by a bank, has a compliance department which requests all sorts of increasing the invasive questioning, such as who are you employed by, how much are you earning, how much have you got in the bank, what's the source of the other money in your bank, etc. And many of my clients would jib at actually releasing that kind of information when they're not confident under GDPR that that information is going to be kept completely private and safe. From our perspective, and this was a point made by the inspector, asking the selling agents for a vendor's CDD, agents are notoriously slow in releasing that information, but it's important that if that information is released, that we have their confirmation that reliance can be placed on it. And without a reliance confirmation, we have we aren't completely safe that we have done the job we should do.
Yes, yes. No, I know from previous conversations that you've actually been through an audit, an Hmrc audit. Can you tell us a little bit about that?
Well, I had a full head of hair before I started that. Yeah, I mean, basically, I think most agents know that, and buying agents know that at any time Hmrc can just get in touch and say, we want to do an audit by visiting your company. We received a telephone call and a letter, this is about 2 years ago, from Hmrc, said they intended to visit us in just over 3 weeks' time, asking if they could possibly see a copy of our policies and procedure statement and AML risk assessment statements. This was followed up in the letter by confirming that the meeting was likely to take 3 to 4 hours. They would require, they listed a load of things they wanted to see: client records, files, CDD checks, bank records, our training log, SARS procedures, etc., etc. On the day, and I must say, it's very frightening experience to think that, you know, with the record people have of mammoth fines, our little company could be undertaking, you know, going through this. But in the event, 2 Hmrc officers came about 10:30 in the morning, very pleasant. They explained what they were going to be doing. They started by looking through our registration documentation, etc., and then asked us to give a brief description of the background of our business, the geographic area we covered, the kind of clients we look after, what kind of fees we raise, method of fee payment, etc. Having received our policies and procedures statements and our risk assessment, they ran through with us what they thought were areas which could have been improved. In particular, our risk assessment, which in the absence of any guidance, we'd written a company risk assessment, and so as to comply with the need to regularly reassess it, we'd actually put this in a document. So every time a new client instructed us, we filled out the client details and then tailored the risk assessment to that client. Well, that wasn't acceptable because that wasn't a company risk assessment, it was a client risk assessment. So that was a point that was made. We were asked about the reasons we might be tempted to make a suspicious activity report, asked whether we'd registered, they wanted to see that we'd registered with the National Crime Agency, so we knew how to go about making a suspicious activity report, but we were able to confirm this actually had never affected us. They asked us about our client profiles and locations, the kind of clients that we acted for and how they were sourced. And then the discussion went into exactly how we go about customer due diligence. In the majority of cases, we're able to confirm that we meet the clients, therefore we're able to ask for their identity there and then, and get copies of bank statements or whatever the client's prepared to release to us. They were particularly anxious to define our client for CDD purposes, what sort of documents we used, and we confirmed the kind of range of illustrated identity documentation, utility bills, etc., and how recent they should have been. We discussed how we would identify politically exposed persons. We were able to, I think, satisfy them that the risk of our doing so was minimal. And then really the concentration of the conversation then concentrated on how we obtain CDD for vendors and the point at which we would require CDD for vendors. And as I say, how to make sure that that we were given authority by the person releasing that information, we could rely on it. From that point, the conversation then went into SARS in particular, asked about SARS reporting. I think this was more to test that we knew the basis on which we would feel a SAR was necessary, what we considered to be suspicious activity, whether we were registered with the HM Treasury for sanction check purposes, which we weren't, which really covered the CDD thing. They raised a couple of issues. First of all, that in entering into a contract with our client, we should not only have the names of our clients at the top of the page, obviously the conversation had included who is our client, people with beneficial interest, as well as anybody whose name would appear on the title. The conversation that went into training, we were asked to produce our training log, the record of all the training sessions we'd had and how we'd gone about training, external courses, internal courses attended. Conversation that went into record keeping, what kind of records we kept of each client and transaction, how long we kept the records. We were able to satisfy them that the identity documentation we keep for each client, we actually kept separate to the client files, under a separate lock and key system, that our computers were password protected for GDPR purposes, as well as our own security, etc. And they seemed satisfied with that. And really that process, I think, took an hour and a half to 2 hours maximum. And the rest of the meeting, which went on till 3:30, was going through client files. They wanted to see 10 client files, 6 of which were current clients looking for properties who we had yet to find, and 4 were properties where we were in the process of purchasing. And the 2 inspectors basically sat down, went through all the files, all the CDD records, took profuse notes in a notebook, asked us various questions about each client as they went, and then the meeting finished by a kind of wind up and a conclusion. The frightening bit about the conclusion being that they felt that our, as I've referred to, our risk assessment statement didn't comply with whatever section it was of the Act, and therefore we were in breach. The word breach obviously raised the spectre of some fine that we couldn't afford. Anyway, the meeting was followed up with some very helpful, and they were extremely helpful through this process of pointing out areas where we could improve. But the meeting then finished up, was followed up rather about a week later with minutes to the meeting that they'd taken, which pointed to the areas which they felt we could improve on, referred to the fact that our breach was going to need further investigation. Liz Mercer, who was our compliance officer, followed straight up by rewriting the documentation that they had criticised, our policies and procedures statement, but more importantly, our company risk assessment, and forwarded our new documentation to them. And I think that in itself forestalled our eagerness to comply, forestalled potential fine, which they thought was not likely, but a possibility.
Goodness. you know, that is quite frightening, you know, as you describe that level of detail. Yours is a small business. You're on top of everything. You work very hard to have everything in place. I think there's a real salutary lesson for all firms in the relocation industry when you know, you talk about that kind of the thoroughness of the audit process. It's yeah, I think it is quite frightening how easily you could be caught out in a very, you know, innocent and kind of technical way, despite doing everything in a, you know, what seems to me like a very proper way. But at the end of the day, taking the initiative and sending in then this updated risk assessment sounds like that was a very smart move, you know, by taking the initiative there.
This gets the credit for that, but yeah, it was. it was in hindsight very smart.
Yeah. So you got through it. I'm just wondering then, more generally, you know, as you look back at that audit process, as you look at what you've had to put in place, I mean, any other lessons that you would share with Hmrc members and who are maybe coming to this for the first time?
I think there are 2 points. First of all, it has to be taken seriously. I mean, to us, it was Liz and I are both qualified and therefore go to regular courses with professional institutions. So AML was never far from our minds. And right at the beginning, you know, it was pretty clear that this is something we had to take seriously. That all the necessary documentation, the necessity to check who your clients are, the necessity to realize when, for example, it's necessary to undertake enhanced due diligence because of the profile of a client, the kind of profile of the property you're purchasing. All these are issues that that we have to continue to remind ourselves to do. But the most important thing, I think, was that just relying on the process is not enough. You really have to ask yourself all the time, what can we do to verify this by any other means? And as a matter of course now, if we've got a client, we Google them, we look up what we can in terms of where they're living, whether they've been there, in terms of planning records for as long as they say they have, etc., so that we've got a much wider profile than just simply necessary documentation. The other thing is training. You know, we've been through 2 years of lockdown. Training is either extremely expensive or very distant. And the days of actually regularly attending, updating courses by going to a hoteling, you know, up the road are behind us. So we've got to continue to make efforts to satisfy the requirements that we are continuing to train ourselves. But above all, it's the necessity to really be on top of the dangers that we could be involved, and if we were involved, potentially very dangerous to us as well as the situation. To remain very alert to the possibility that this very nice person you're being asked to act for is actually laundering money.
Yeah. Well, Colin, we'll end this now, and I just want to end by saying thank you so much. I'm sure that all Hmrc members watching this will be so grateful to you for sharing, you know, so candidly and so clearly your experience of implementing anti-money laundering processes and your survival of an Hmrc audit, which is fascinating and is certainly a lesson for us all who are involved with anti-money laundering. So thank you very much.
No, my pleasure. My pleasure.